start recording. And here's Tom. Tom, everyone's listening to you.
Is it time to start?
Yes, it is.
Thank you very much, Rita. And hi, everybody. Tom Williams here, speaking to you from Worthing, Sussex, England. And the weather's turned a bit rough here. It's pouring down with rain. It's chilled off a lot. But so I put the central heating up, so I'm okay, or we're okay. Anyway, the chart we've got up now is the chart that I used for my newsletter last Sunday. And oddly enough, I said at the time, I said, don't be surprised if that chart doesn't hit that bottom trend line. And look at that. It's bang. It has actually, I think, hit it. And that was obviously like a shakeout. And the markets responded to that. Look, it's shot up and a widespread up. We can see that. Mine is not up to date today. It's yesterday. And of course, we've got the privatization of the post office here, which is quite big in England, but whether that affects the US market, I'm not sure. But all these markets tend to go up and down together, so it must have some influence. But you can now see why, look at this chart, why I always recommend drawing trend lines. I find it difficult to look at the chart unless there's trend lines on it. I'm so used to doing it. I used to draw the trend lines as I used to draw the charts by hand. I had this long metal ruler, which we used to draw the lines, or I did, right out into the future. Because, but with a computer, you don't have to do that because we generate, that's how we generate what we call trend clusters, by these trend lines going off into the future. But you can see what a terrific guide these trend lines are. And something will happen when the data or the chart reaches these trend lines. Now, why they work, it's obviously something to do with human nature, human habits, the way they do things. I couldn't explain it to you technically properly, I suppose, but there's probably several people out there that could. But they do work, that's all I know. In a bull market, you draw the trend line through the first two support and the first high. That was the traditional way, and these would draw way back. So that's good. Okay, so we can see it's barreling up. We can see now at the top of the market there, right, you can see there's no any real signs of weakness. I mean, there's no ultra-high volume and up bars. There's no end of a rising market. There's not even no demand. Mine, if you look at a weekly chart, can you put a weekly chart up? There is a sign of weakness on the weekly. So it does pay to check all these different time frames. 12 less bars, Rita. That's it now. Look at that. Now, a lot of these should really have a signal on that. Are they turned on, the signals? The reason I say that, Gavin's here. He's gone now, about an hour ago. He's always switching things off and on and doing this and doing that. The signal there is there. Anyway, look, that is a weekly chart. And that is a very, very, to us, obvious sign of weakness. That is a true upthrust. It was up. They market outlook to mislead as many people, traders as possible. They catch as many stops as possible. Encourage people to go long in a weak market. And then they reverse it and bang down. But that's a weekly chart. But I must admit, I do tend to enjoy scalping these charts more than the long-term business. It's quite a bit of fun to do a bit of scalping, take a few $100s out of it, and enjoy myself that way. Right, so what we'll do now, we'll have a look and we'll see what the intraday chart, put a 30-minute up, Rita, for me, thank you. That's it, a 30-minute look. Now all these time frames are usually full of information. And you can see it's a 30-minute chart look. And you can see right on the low here, there's a few nice signs of strength.
Potential selling climax.
Right. That said selling climax. Yes, I would sort of half agree with that. But it's certainly strength coming in. What's this one? Shakeout. But they are signs that professional money is stepping into the market. Basically, they are red down bars on narrowish spreads. Now we can't see the volume very clearly because it's Globex, but it was probably an increase in volume there, and that's what brought those signals up. Okay, so we've got that. And then of course widespread up. Now the computer thinks that's a bit of weakness because the volume is very high. I think that's probably when the US market opened. But I've said time after time, if you ever see a red arrow in a rising market like that, and it's tested in the next 1 or 2 bars, now there's no signal, there's a test look. There'll probably be signals on other time frames, but whenever you see a red arrow like that, and then you see followed shortly by this down bar look, with markdown, close top quarter, the spread is sort of, well, I suppose you could call it getting onto narrowish, and that volume look is very low. As a matter of fact, it's so low the computer recognizes it as low, and it will color that pink for you. So that's saying, look, okay, you've got a bit of weakness here, yes. There must have been a genuine weakness there for them to test it. And they tested it, look, and there it is. And that's why, bang, up it goes. We've got a little bit of supply or something coming in at the moment, right at the top.
Supply coming in.
Supply, there'll be, well, it's only natural, isn't it? Whenever you get an up move like this, you will get certain element within the market. Professional element wants to take some profits from that move. They can be just as nervous as we can, sitting out here looking at it. And whenever you see these up bars, note the spread has narrowed. Right? It has closed just off the highs. The volume, well, it's increased, but I wouldn't say it's particularly high, look. But it has increased. So that is definitely some supply, and that'll knock that market sideways for a bit until it recovers. But that's a 30-minute chart.
Andrew would like you to explain what Globex means.
What is Globex? Globex is the trading that goes on continuously during the night, or our night, or when the S&P 500 is closed. I remember being in the exchange, and when the pits closed, right, if you go upstairs in an elevator, you see a large room with a load of computer screens, and there was guys sitting in front of it with white shirts on, and they were peering very hard, and that was the Globex trading going on. So they're aware of what's going on. Don't worry. But Globex is a continuing program of trades going on throughout the night. Now, obviously, because the S&P pits are closed, the volume plummets down, goes low. But you can still read the markets. It's still very interesting. And as far as we're concerned in the UK, very often the boys in London start trading this, I know, about 8 o'clock in the morning, our time, and you often see them doing something. We often see some sort of principle appearing. And now, I'd like you to please type in questions. Rita's here watching the screen, and she'll read them out.
Yeah, so Andrew, that Globex is, as like Tom said, it's actually the trading that goes on outside of the normal hours. So if you look at the program, you see this massive volume. That's when, this is when the market opened at 2:30 UK time. I don't know what country you're in, Andrew, but and that's why it hits the program with all this volume, but it's so big compared to this. But this volume the program does still pick out the volume changes, but this is what goes on outside. That's it. As Tom said, we're looking at relative volume, and Eleni says here you can hear a spot of tea in the background. Yeah, yes, we're having tea. Right, we always do. Would you look at HNR daily? Please put up 60 bars for Pete. HNR. I'm going to put it in here. See if we're right. I'm put 60 bars. Just putting 60 bars up here. So bear in mind, I might have to go down to less bars because of Tom's eyesight. But that's Tom. That's the bigger picture. Can you see that volume?
Well, there's volume there.
Yeah, and it gapped up.
It gapped up. You're on some sort of news.
Yeah.
This one knocked that sideways to there.
Right. So
What do they do? Who are they? I wonder.
Tom's asking what is HNR? What particular stock or is it, or one, says Edmund. Or oil refinery. What oil refinery? So Tom, give you the headset. Are you all right? And I'll put less bars. You tell me when.
Well, the overall picture, look, these gap ups obviously done on some sort of news. I mean, this one, look, there'd be some sort of news. They've done that. They gap it up, look. It's hit some weakness, look. And therefore that made it drop off, look. And there'd be no selling pressure down here. They gap it up again, look. It's obviously quite volatile. Right, so there is supply there, which you have to be careful of. Right, and that's moved that high volume there, look. Markets don't like ultra high volume and up bars, and that's what knocked it sideways. But there'd be no selling pressure if you look at the volume. And it's gone up, look, and this looks like a test here. Put up less bars so I can see it.
That's 20.
I've got 20 bars up. Thank you, Rita. Okay, so they marked it up. Look, there is a bit of volume on the upside, which markets won't like. But they push it up, up, up. And that bar there is what we call a weak-looking bar. I'm afraid there's no signal on it. On that bar, look. See, we do have what we call weak bars and strong bars, looking bars. And that's what a weak looking bar, it looks almost like, you can imagine upthrust, couldn't you? but it's not an up thrust, but it's certainly a sign of weakness. And on that, it's come off, look. And the volume is low, isn't it, Rita?
Yes.
And it's had to be up to date, and it hasn't responded. Well, I suppose it has back here. What time frame was this?
Daily.
Oh, a daily. Oh, right. So with that surge in the S&P 500, you expect that to have gone up today. But there is some strength in the background, but there's also weakness. So it's a sort of stock that could trick you easily and could get you wrong-footed quite easily.
Right, there's various questions coming up. And I'm going to go to here. I'm just putting up that. That's the 5 minute of the hang on, no it's not. That's the 5 minute of the ES. Just putting that while I speak. Anyway, okay. Oh, good question. Actually, I was going to say, sorry, I can't look at Tom's screen and the other screen at the same time. Just look, there's a question from Gordon. Why is that blue bar weak? And that's a good question, because I was thinking, well, Tom, perhaps you should tell people why that bar, we're back to that screen HNR, Tom. Why is that a weak bar?
Well, because it looks weak. I'm sorry. I'm sorry. Well, first of all, you've got this rapid move up behind you, even gapped up, look, which isn't really healthy, okay, when they have to gap it up. Okay, and then, look, it's been marked up to the high, and on that, the back of that is closed slap bang in the middle. And there's nothing reason why it should do that other than built-in weakness. There's no reason why that should have been gapped up and then closed in the middle like that, sticking out there on its own like a telegraph pole. There's no logical reason why they should do that. If the market's strong, see, these are strong-looking bars, ones that go up and close near the high. And then not only that, this is backed up the fact that the next bar's down, look. But we do have such what we call, excuse me, strong-looking bars, strong bars and weak bars. Now, I could spend probably an hour or two talking about those. But they're so obvious, you look at them, you recognize them immediately as a weak-looking bar or a strong-looking bar. I mean, well, it's a whole subject really I could talk about, but that's why it's weak. And I'm surprised there's not a signal on there, to be quite honest. Anyway, we're getting a little bit closer to be able to adjust this software, the signals, to a finer degree of accuracy. Apparently we've got this Russian guy coming over next month who's happens to be a genius, so I'm told, and he's knows how to do the code on this particular software.
Okay, Tony is asking, what are your favorite trade setups, Tom, and how do you choose a stop loss? So your so favorite setups, stop loss.
Now, Gavin's been here for the last 3 days, and I must admit I do more work when he's here to help him, I look and all the rest of it. And it's amazing the setups that we've seen, and he sent out a load of so-called alerts. And when he sends out an alert, I've asked quite a few people what they think of it, and they all nod their heads and say, "Oh, it's quite good." Right? Now a setup is a point where to you, the observer, it looks like the chart is telling you very loud and clear, look, I'm going up, or this is strength, or I'm going down, this is weakness. Now the typical one that is fairly obvious as far as strength is concerned, you see it all the time, and you'd be, now these alerts hopefully pick a lot of them up. And when we get this Russian guy working on it, perhaps you'll even be more alerts. The biggest problem with trading is you've got to sit there in front of this screen. So you've got one chart in front of you, but you've got hundreds of others all hidden away from you. Now, there's all sorts of things could be going on there. There could be all sorts of alerts, be it strong or weak, but you don't know. You can't go rushing around like a mad hare looking for this stuff. But apparently, this Russian guy has decided that he can alert you by looking at the numbers that we put onto each signal. Now, as far as I'm concerned, the best alert for me is fairly obvious. The market falls. Right, now, once the market falls, especially if it's come down quite a way, then you are what we call vulnerable to one or more groups within the market deciding, look, I think we could go in here, right, buy some, and then take it up for a bit, and we'll make a profit. That's what they've got in mind, right? So when you suddenly see what we call stopping volume come in, it'd be on a down bar, it'd be a red down bar. If it's a narrow spread, right, and the volume is very high, in other words, the activity is very high, especially if the next bar's up, it must be, there's nothing else can cause that if you think about it, other than professional money coming in with their 50,000 contracts, absorbing any supply that happens to be there and bulldozing their way into the market by sheer volume of power. Now think about that. It has to be correct. You don't have to be a rocket scientist to understand that. Okay, that's why we call it stopping volume. Now there's other stopping volume which we call bag holding, which we saw, I think it was day before yesterday, on this S&P. And that was interesting because that's almost the strongest, most powerful signal we have for an up move. Okay? Now, once you see that, then you know that normally, we're talking about normal activities, they will want to test that. Because the amount of money involved is so great, it makes them nervous too. They're not free of nervousness, believe me. And so when you see the stopping volume, suddenly the market may go up 1, 2, even 3 bars. Then it goes sideways for 2 or 3 bars. You may even see a red arrow, little bit no demand at the top there. And then you would expect normally, and this is what the professional money is looking for, is goes back down into that area where you first saw the stopping volume, that level. Right? Now, when it gets down there, if the volume is low or the activity is low, that's telling you loud and clear that the supply that created that high volume to your left on the screen has been absorbed. It's disappeared. It's been taken care of. That's one of my most bullish signs for an up move. There are 2 or 3 others, but that's one of them. And I think our alerts, or Gavin's alerts, are based on that, definitely. And that's the strongest one I can think of. bag holding. Once you see the sign bag holding, that's a very powerful signal of strength. Very powerful. And that appeared on one of these charts 2 or 3 days ago.
Whilst you were speaking there, Tom, Carlos said, please look at the YM charts, futures. I've put it up daily. Yesterday is the highest volume. You mean the day before, don't you, Carlos? Do you mean this bar here? I think you mean that bar. Tell me if you don't. This is the Dow daily. So, yes, in my chart. Okay. So, Carlos is saying, you were talking about bag holding. Would you call that bag holding? Myself, would you, Tom? I thought it should be a down bar. There you are. Here's Tom.
It's the sort of thing bag holding looks like. Now, why do you think it's strong? Look at the spread. The spread is narrow. And not only that, it's closed near the high, look, top quarter. There must have been buying on that bar. We got no automatic signal, unfortunately, but there will be on many others. And of course, a lot of these bars here, there's been buying on them. But that one, especially, when you see it's at and is fresh, low ground, that also makes a huge difference. When it's down there and there's nothing to the left, look at that level, and you see the spread suddenly get narrow. Not only that, you've got that big down move behind you. The market is extremely vulnerable to professional money looking at that with great glee and thinking, cool, look, I think we can make some money here. Let's move in. We bulldoze our way in with 100,000 contracts or something, whatever, and bang, we'll take it up. We've hit the bottom trend line, look, and so on and so on. And that's a narrow spread. You don't see strong bars looking like that. And that's why the main thing is it's a narrow spread. Although it's a blue bar, it is down, look. It has gone down. Right, it's closed in the top quarter. Volume is not exactly excessively high. Well, yeah. Well, don't forget we look at relative volume, right? I can't move the cursor now. What's happened? Anyway, sorry, I can't move the cursor. But even there, look, if you look at this previous bar, that's down quite sharply, and there's no selling pressure, look. Professional money would see that immediately. And next bar, they mark it down again, look. Very narrow spread. Closed near the high. There's a slight increase in volume, although don't forget we're looking at relative volume. The computer, be quite honest, I don't look at what the computer calls it because I know I can visualize, see it. But that is definitely increased. It's not excessive, it's not low. Right, and that's the reason why it's gone up, because of these bars here. And look how this trending system works. There. Now look at this trending system up here. I mean, I've said to Gavin today, look, Gavin, if you want a good automatic trending system, just link it in with this trending system, simple trending system. Once the market starts falling, look, red, 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 allow for one up bar, which would be on lowish volume, down, down, allow for one up bar, down, down, allow for one up bar, down, down, then the strength comes in. So even that trending system, it works. And the reason it works is because the market is so cunning, so devious. Professional people operating this inside do not want what we call weak holders. That's a holder that's trapped in the market at the top here, right, to have any sort of rally to get him out of trouble. They know they're sitting there, and they know perfectly well if that market is allowed to drift up, they're going to sell. Okay, but they don't allow that. Whenever the close is lower than the close of the previous, it's done deliberately. And that's why you get these red down bars like this. And whenever you do see one up bar, it's only one up bar, not very enthusiastic. And it usually goes up on low volume, narrowish spreads look. Now it's different now because they're moving in, buying it here, and that's why it's gone up.
I'm not sure whether Tom actually answered the other part of Tony's question. Did you talk about how would you choose a stop loss? No? There you go.
Where do we put the stop loss? Well, the thing is, you see, with stop losses, the professional money, the floor traders, they have software that tells them where all the stops are being placed. And believe me, it's very lucrative if they can catch those stops. And they can mark these markets up and down. You've even seen it flashing up and down. May only be at one point for about a second, but that's enough to trigger the stop. So what we recommend is that you, first of all, you put the stop loss, if you've gone long, underneath the last support, and if possible, put it on an odd number. And the reason why we say odd, because the herd, right, think in even numbers. They tend to put their stops all bunched together on these even numbers underneath. And that makes it easy for the professional money to grab all those stops. But if you place them on odd stops, then you might, or stand a greater possibility of them missing you. It's like if you go to an auction and say you think, oh, something's worth, you're going to pay $200, that's it. But if you say I'm going to pay $209 or something like that, you're more likely to get it because a lot of people are going to stop at 200 or 205, these kind of roundish numbers. And that's the theory behind it. But if you go in on a recognized principle and you keep your eye on it, you should never leave things running on their own without close observation on them. It should work for you if you've recognized the principle correctly. And these alerts that Gavin gave out, at least what they do, I haven't looked at many of them, but at least they're based on these setups. And they will get better. I would have thought there's a huge educational advantage for you.
I have a question for everybody. Who's new to VSA in this, in the watching this webinar? Because I'm getting the impression there are a few new people. If you're new, can you type N or in the question box so we can gauge who's here and how we should be answering questions? Almost, yeah, one, two. Yeah, a few new people. Yeah, I thought so. All right. Yeah, okay. Well, so, right, hang on. I don't know if you've read any of the books. Tom's book, The Undeclared Secrets That Drive the Stock Market. There's also Gavin's books. Those are places you can really educate yourself in reading the charts. So they can be really helpful. We could show a few setups. It's actually, you know, I've also got a question here. Can you, from KB, can you show us a high time frame chart to give us an idea of the overall market condition? We did start off with the daily and weekly chart of the S&P. Also, can you find a current Wyckoff formation on a small time frame to show an example of a day trade jumping the creek or breaking the ice, then test, then enter? So that requires me, I don't want to spend the webinar flicking around looking for setups. It's good if I was prepared and look, you know, beforehand looking for some setups and things. So it's difficult. If somebody could, if anybody you know, is aware of a chart that quickly that they could give us a ticker name, and we can have a look and show you. Can you find a small time shown? Jumping the creek or breaking the ice, then test. So, Tom, you've heard of all these terms, haven't you? Try to explain what they are.
Well, that terminology came from the Stock Market Institute, which is now based in Phoenix, Arizona, and it was they were using that when I first studied it, and they were in Park Ridge, Illinois, that's Chicago, and they were talking about crossing the creek and jumping the creek and all this business. But I don't use that sort of terminology. When I did this software, I like to call a spade a spade. It's just my personality. I can't help it like that. But I know what you mean when you talk about crossing the creek and all this sort of stuff. But I don't particularly use that. And when you put the cursor on any of these signals, right, you see there's a dialog box. Yeah, and there's a lot of information there. I think you find my information there is far, far superior to what SMI taught, because SMI, I looked at it. I had the course actually, and the charts were all pre-war, Second World War, and it was good, but it wasn't anywhere near as good as this. I can tell you that now, and because this is computerized, and with a computer, these signals are automatic, right? Got nothing to do with any human behavior at all. Now, with a computer, you've either fed in the correct information, right? The program would have fed it in. If he hasn't, you won't get signals properly at all. Now, these have been running for many, many years, and the good ones, they're still good, and they will be another 100 years' time. They'll still work. So that's how the market works. So in other words, when you have a computerized system, you've either got it right or you haven't. To get it right, you have to feed in the correct information. And we don't hold any secrets. We more or less tell you what the information is. It tells you in the bar, up bar, narrow spread, ultra, all this stuff. And that is all the programmer has programmed into the source code. So we don't talk about crossing the creek and all that, but I know what you mean. I mean, you talk about, there's a term in there, even that we don't use, called a springboard. Now, there's a lot of people say to me, well, what's a springboard? Well, funny enough, Rita, if you put a weekly chart up of the S&P 500, it's a very good example of a springboard. on the low.
Here.
Well, put more bars up. Daily.
This is the weekly?
No, I want daily.
Okay.
I know it's because I was looking at it earlier on. It's a good example of a springboard.
Further back. This is the daily of the S&P.
Right. No, sorry. I want a weekly.
Right, that's the weekly.
If only really want to find these things, you can't find them. Perhaps it's on the daily chart. That's a daily. Well, a springboard is when you see the accumulation coming in. I can't find it now, sorry, but it's there somewhere. You see, it happens after a down move. You see the stopping volume come in. In other words, the high volume, the down bars on narrow spreads, big red bars. Right, then the market goes sideways. And in the weekly chart, it went, or the daily, whatever it is, it went sideways for several bars, 5, 6 bars. Then when they've accumulated, they're ready to up move, then they have a severe, what I call a shakeout. They mark it down and then release it and up it goes. And that's what a springboard is. Well, I'll find it on that. I can't. But please, if you've got any questions, but don't worry. I mean, all you newcomers, right, you might come in and not really realize what you're looking at. Brokers might say, oh, no, that's ridiculous. Say, how on earth can you say, I've heard them say, how on earth you know the market's going to go up or down tomorrow? It's impossible. You don't know if the news is going to be good or bad tomorrow. May suddenly, and all this type of thing. But see, what they don't realize is that we've got hundreds of thousands of people trading, some buying, some selling, some sitting there doing nothing, and so on and so on. But the end result is that all the active trades are recorded by the appropriate exchange. And that's what we put up on the chart underneath here. Right, and then when we see that, we know that is activity going on. So when you see high volume in instruments you're looking at, then you know that something's going on. And that's what we look for. And we know that professional money, they can't move into the market without leaving their footprint for you to see. And that's usually on very high volume, down bar, red down bar, narrow spread. And then if you see any testing, right, from there on, you know that's going to go up. A test is when they mark it down and you see the volume is low. In other words, where it was high, it's now low. It means there's no professional money, not interested in the downside. And that's what you're following. You're following the professional money. Professional money are people that put in 50,000 contracts and think not too much of it. That's what the professional side will do. There we are playing around with our 1, 2, 10 contracts. But they've put in 50,000 or even 100,000 contracts. And they work in groups. And it's that force that changes the balance of supply and demand. That's what we're following. If it's not too clear to you at first, it will do. And don't forget, a chart is a language it's speaking to you. It's like Braille. And when you get to learn how to read it and read the setups which you surely will. I mean, I've got Rita here sitting beside of me, right? She knew absolutely nothing about the market. Was it 4 years ago? 4 years ago, her husband came in to repair a computer. He was interested in what I was doing, and Rita was. And they tagged onto this. Now Rita, on a regular basis, takes several $100 home with her. Well, she's already at home. She trades from a kitchen. And she can do it. You can do it. But that information will be with you for the rest of your life. So it's well worth doing, believe me. There's lots of people out there that don't understand it and say, oh, it's a load of nonsense, but believe me, it isn't. And we can prove it isn't. If you look at these automatic signals and you say, well, yeah, a lot of them are very good, or, yeah, I'm surprised with the accuracy, then to do that, then the information must have been fed into a computer. A computer must be right information, because computers don't understand flaws in your thinking. They don't understand flaws in your logic or mistakes. You either got it right or you haven't, that's it. And if you think a lot of them are good, then the information that the computer has working merrily away in the background, right, must have been correct. And that will give you confidence to know. We never follow mathematical formulas. We don't have to. My theory with a formula is that if there was a simple mathematical formula out there that reliably worked, right, then there's so many very clever people out there with clever brains and lots of money, right? They would have spotted that. And the fact is that when those formulas started to look like a formula, then they would be in trading that, and they would trade the formula out of existence by their trading, and it wouldn't be there anyway. And I think myself that when you go back in hindsight and look at a lot of that stuff and think, oh, that one worked, or that one did, it's because not enough people were trading it. Nobody traded it. But believe me, you can imagine it. There's some very, very clever people out there. And they're certainly not going to let things like that go by.
Yes, so people who are asking about, setups and things, that's why I mentioned the books, but also who somebody else on here was mentioning, of course, there's the videos in the archives of the VSA Club website. Lots of videos there, and talking about tests and all sorts of setups that you can watch them, and they're very informative. Yeah. So Louis says Philip Friston. He is a very accurate, precise guy who prepares very well his webinars, and he's very clear, and he's very experienced, and you can rely upon Philip to put the information across to you very clearly. So he's a good one as well. All the and Gary Dayton as well. Everybody's got their own style, but there's a lot you can learn from them. So the books and the videos, and in a way it is actually quite simple. There's a thing, if Michael, I'm not sure I understand your question, Michael. Are we supposed to recognize preliminary support, selling climax, automatic rally, secondary test, next sign of strength, last point of support supply, just by viewing a chart? As from a video master who uses TradeGuider software, Matt from Informative Traders. I'm not sure I understand the question. I've never heard of Matt or Informative Traders. I don't ever really look at other people while they do outside of here. But if the question is just from looking at a chart, Tom will say to you that the chart is a language in itself, and he's a very visual person, and for myself, I'm quite a simple person. I'm not a mathematical, analytical sort of person. I'm not a genius. Yeah, Tom's, I'm not a genius. No, and I'm not interested in lots of names and technical terms or any of this stuff. All I want to know is how I'm going to make money and how I'm going to do it successfully, and I want the easiest way. And to me, the easiest way is how Tom talks about it, using the chart as a language. It's a picture. So if you really wanted to put it simple, you look at those, you learn those setups. So I was flicking around trying to find things that were really clear, but I look for this. Well, here we are. I mean, here we've got, it's calling this potential stopping volume. So, and Tom says this is a springboard. This kind of volume, this is what I am looking for. First of all, I'm going to sound really simple here. Tom wanted to show you this, but this volume, either down here after a downtrend, it might not be an ideal chart, but here we go. After a downtrend, when lots and lots of volume comes in, and that's indicating to me that this is possibly professional buying. It says potential stopping volume. Now wait to see what happens on that volume. And the next bar is up, which is telling me there was a lot of buying on this bar here. So this is what we look for. Alternatively, when we've had a big uptrend, and then I see this massive volume on an up bar, then I start to get interested, and only then, because that's, as Tom says, it's their footprints, it's professional money, this is they're up to something. So then I see, well, what did the market do on this volume? Did it go up? Well, it's gone up. I'm a very cautious person, and I wait after then for a test in a rising market, and funnily enough, we have a test here. There's a test there. A test is a down bar, narrow spread on low volume low compared to the previous two. And so the market moves up, and there are several tests as the market moves up. There's another one here. And if you learn about tests, they're very, very, very powerful signals in a uptrend. If you're going on a downtrend, you've seen this massive volume up here on a blue bar, and the market responds to that by coming down, or you see an up thrust. I don't know if obviously most people in the room have heard of up thrust, but there are new people. I'm trying to be simple for people who might not know about it, but up thrust, when it comes right up here to catch stops and it closes on the low, these are other setups up the top, and you see the market respond. And if you see a no demand, which is an up bar, narrow spread, volume very low compared to the previous two, that's a very powerful signal. I often watch it respond. As soon as obviously professional money see a no demand, they know there's no demand and it can really go. So that's a really simple view from me, and that's how I read the chart and I've learnt it. There's no point in being too analytical. It's a picture. This is a picture, and it's a simple picture. But as human beings, we want to complicate things, and we often we start seeing things that are not actually there. So you want to see really high volume first. That's what's going to get you interested in the chart first of all. So sorry, I did go on a bit then. On oh dear, KB, where were we? On what chart are you talking about on October 8? What chart were we talking about there, KB? October 8. No, not this one. So this is the one you just talked about. Oh, what, this same chart here. KB, yes, there. On October 8, there were 4 bars with sign of strength signals. Would you have traded that? You mean down here? here, this down here, well, yes, because there's well, I don't know. It's difficult to say because I would have probably waited that there were signs of weakness here. When you see this, if you see massive volume right down here, you want to see it come back down to that level, and test it on that kind of volume. So I wouldn't have traded that, but I would have traded something like that there, and definitely something like that, and this definitely, because that is a lovely test.
Now, if you're new to the market, there's a lot of people who are not quite familiar with the word test. Now, what is a test? Right, now the biggest danger to professional operators in the market that are running all those huge number of contracts is that there are no friends in the stock market. They all hate each other's guts, to say, you know, and they will do each other out if they can. And the biggest danger, if you're running 1,000 lots or 50, 100 lots or whatever, is that other professionals will have an opportunity to take some of those contracts off you and make you a loser. Right? So what they do, the people that are pushing this market up like that, they want to know that there's no supply around, enabling the other professionals to take any advantage at all. So what they do, they test the market. And this is what one of the big things we look for. You have strength in the background, and then on the way up, they start testing. Now, what is a test? Now, I've described this, and probably a lot of you heard me before. Imagine you are a general in the Second World War, right? You move all your troops up to 2 or 3 miles of this town that you want to capture. And you sit there looking at it through your binoculars. Now, you're not sure whether the enemy is still entrenched in there or have they fled, have they gone, right? You probably bombarded the place for a few hours or a day or two anyway, and you're not sure whether the enemy is still hidden in there. So what you do at night, you send in a column of guys all dressed in black, boot polish on their face, the whole works. And they go in and look around at night to see whether the enemy is actually there, entrenched or not, right? And then what they find, they report back to the general. That's a test. They're testing whether it's safe for the general to move his troops into that town without them getting slaughtered on the way over. That's a test. The same thing happens in the market. And then you see it in the market, you see a red down bar, narrow spread, right, and the volume is low. The enemy is flown. There is no enemy. And therefore, you'll see a vigorous up move after it. That's a test. And we've noticed too, I've mentioned this several times recently, that if you see a buoyant market going up, you see a red arrow, right? If there's a test for the next 1 or 2 bars, that's some testing to see whether there's any danger there to taking it up higher. And that's a very, very powerful signal for us to look at, and you can certainly make money on that.
All right, so Luigi's talking about the Hang Seng Index. I had to ask him what the ticker name is for. So we don't have it at all. We can't. All right, we can't do it. Tom says we don't have data for it. So would Gavin have that, or Philip? No. Well, it's worth to trying Gavin or Philip Friston. You can post questions in the forum. Philip's really good. He watches the forum and he will answer your questions. So you can ask him. He might. He's pretty good. He gets quite a lot of data. Jerry, listen to this, Tom, then. VSA versus technical analysis. Although a general statement, after having started out learning technical analysis, it seems that a major difference is that VSA follows the smart money interactions, while technical analysis focuses on the retail interactions and specific support and resistance levels, and less on when smart money enters the market. There are flaws in some of these conclusions, but the focus of these two camps is completely different. Tom, does that make sense to you? Have you got anything to say? Yeah? Okay.
All I can repeat what I say is that if you think the signals in VSA that appear automatically, right, over the years without being touched or altered are pretty good, then you must assume that to do that, you must have fed in the correct information via a programmer into the software. Now, I haven't heard of automatic signals that being any good with technical analysis, to be quite honest. But you can see with your own eyes here the software working automatically. And then once you learn to read this, right, these charts, because the signals are there to help you recognize what's going on. Once you learn to read the chart, you'll have that information with you for the rest of your life, and you'll never ever regret it. And you'll often sit back and look at these charts and have a good laugh when you listen to the news and all the rest of it. Remember, the news does not necessarily move the market, but professional money that are involved know what the news is. You'd be very naive if you thought they didn't know what the news was going to be. Right? You'd be very naive. And they will shift the market if possible, market up, market down violently to better their account, not yours. You think about it. That's what they do. That's what they have to do to stay afloat.
We've got so many questions and we've actually ran out of time, but so I apologise. If you have questions, do put them in the, if we can't cover them, put them in the VSA club. But B Arc is saying, what is hidden selling? Tom.
Where is it? What's he talking about?
What is hidden selling? Have you spoken about hidden selling?
Well, that term may have been used in VSA somewhere, but I can't specifically answer that because there's no such thing as hidden selling. You can see the selling by the surge in volume or activity, and there's a spread narrows. That's selling. Now, whether it's hidden or not, I don't know. But I'd have to specifically see that on the chart if I could answer that properly. But don't get too clever with these things. I mean, even Rita's husband here, he's a good trader now. But at first, I said, look, Peter, I said, you're too clever. Don't think about it. You know, he said, well, isn't that volume because they've gone to lunch and all this sort of thing? No, don't get too clever. Accept what you see, because the trading market never really sleeps. So don't kid yourself they've all gone to lunch or something. They never sleep. Don't be too clever. Believe what you see.
Yeah, and I've said, you know, we at home we talk about we see things going on in Globex, for example, and we see what is a test, and we talk ourselves out of it because oh, you know, oh, can you trust that? It's Globex, you know. And you go back in the morning, and sure enough, it's responded to that test. So it's our brains talk us out of things. KB, you were talking, Tom. If the market is going up and you see a red arrow, is the red arrow the test or the next few bars? Sorry, but it was a good comment. Right. So just explain that again.
Now, as you see a market shooting up, there will be some nervous professionals there that may decide they want to sell something, right? Like us all, you know. You're making a few $100, think, oh, your wife leans over, you say, go on, sell. And therefore you sell. But the computer picks that up because it can't hide the footprints there. The spread would have narrowed slightly, the volume would have got high, and so on and so on. Now, the big major players in there that have still invested heavily in Upmove want to make sure that the supply has in fact disappeared, and therefore the test appears the next bar or two. Usually, if it happens the very next bar, it says, look, the market's very, very strong. It's going to shoot up. And if you just traded on that alone, you'd be a very poor trader if you couldn't make any money. Now, I think we've run out of time, haven't we?
Can we do this one?
Yes?
Just one.
Rita said, can we do one more?
It's just me, because I feel guilty if we don't answer. But Eleni, because Eleni did ask a long time ago, and this is, Tom, this is Coco. Could you comment on Coco? Yeah, I mean, I'm showing you the longer term, but then if you want, I'll bring it back. So it's had a good old.
Can you draw a trend line on there to there and there?
Right, hang on. Oh, sorry. Oh, messed that up. Ignore that, folks. Whatever it was. From where, Tom?
First two lows, first high.
Like that?
No, there. First high.
Along there.
Now, it's always a good idea to put trend lines on because it gives you an idea. Well, we know trend lines work, and we want to know it's like a highway sign pointing you the direction. And it's obviously trending up at the moment. Now, can you put 20 bars up, Rita?
Eleni is out of this at the moment, but she did catch the trend, Tom.
Oh, good. Now, yeah.
Do you want to see that signal?
Well, I'm trying to move the cursor.
Oh.
We're doing something.
Yeah.
Okay, and the reason why it's obviously trending up quite heavily, and it looks strong at the moment. That's a test there, look. Although it's an up bar, it's still a test, and there's certainly a sign of strength back here, look.
Stopping volume.
Stopping volume. Now that means that at that point, professional players must have stepped in. And then back here, they're testing it, look. And that definitely looks like a test. Although it's a blue up bar, when you see these bottom tails like that, and on the back of that is shot up, look. Now there is a bit of supply on there, which is natural, because it's a widespread up, right? But there's nothing here at the top. I could say, look, that's weakness. Although there's a bit of no demand up there, look. These boxes are telling us there's no demand.
Supply.
Yeah, because the spread has narrowed. But I think it's a bit late now to jump in and expect that to make a profit on the upside. You need to get in on these proper signals and needs testing down here. But trend lines do work, and there's a expect this to hit that top trend line up here, look, and the weakness will appear on up bar very high volume.
Okay, I do apologise. We have run out of time. There are a lot of people here and a lot of questions. B. Roman, yes, I'll be back as well. We're here every Friday, although I'm going away for a week this week. Yeah, I won't be, but Tom and my husband Peter should be here next Friday. But yes, I'm here nearly every Friday. So I'll also, because B. Roman was just saying he liked the simple explanations. So a good thing to do is perhaps if I prepare a little next time with some charts to put up some nice clear principles, setups. So, when we come to these webinars, we just don't know what's going to come along, and what you're going to ask. We talk off the top of our heads, as Tom says. So now, Winston, yes, well, I say this every week, yes, this will be archived if there are no technical difficulties. And that requires my husband, actually, because he's the technical man. So yes, I will tell him to archive this. So with regards to newsletters, as I am away, I have to say there probably isn't going to be one this week. And next week there may well be one, but it will be a little late. It'll be when I get back from being away. So just bear that in mind. But yes, we do one every week, a newsletter normally. So, okay, next Friday, hopefully you'll see Tom and Peter. Have a great week. And as I said, we do look at the forum. So if you have questions that you haven't had answered, put them in there, or ask Philip Friston or Gavin or whoever on their webinars. And thank you for coming along. And we'll see you next week. Bye-bye.
Welcome to GoToWebinar, Web Events Made Easy.